Hi folks. On my previous presentation, I did talk about breakouts and velocity. The entire research is based on breakouts and velocity, and I will probably take you down to uh, the nitty-gritty part of it for folks to understand the power of machine learning intelligence and high frequency trading scenarios. So, of course, every day we generate reports which comes in from a predictive model as soon as the market closes. And I will walk you through as an example to show you how these affect. But before I do that, let me get started with my own trading account just to show you the type of returns you can expect before you continue watching this video. Give me a minute. Let me log in. So this takes you to my live trading platform, and I will run a couple of reports just to show you. Maybe I can run this report just to show you guys today being October the 14th. I'll try and show you what I have done and with my performance for a year-to-date type of a scenario. Let me run this, take a snapshot of it. So it seems the report is out here, and if you can notice, this is my own personal account, and I have done around 27.52% till October 14th 2017 of this year. So if you take a look at the S&P, and let's take a look at S&P for year to date. The S&P index for year to date is roughly around 14.04%. So effectively I have just done double of what S&P has done. I've done almost like 27%. So this is the the benefit of using machine learning, where basically human emotions do not play any role, and at the same time I would emphasize that uh, with the help of breakouts which we get from these reports every day, we uh, we are able to identify that okay, where the stocks might take a spike, and we leverage with high frequency trading platforms where we trade with additional features which I will get to explain in a while. So and of course in this video I'll have to pause because I cannot do recording more than 10 minutes, but please bear with me. So let's pick up any date. I will probably pick up, let's see, April. We have tons of report here in the month of April. Every day we had breakouts. So let me pick up April 12th and try and demonstrate what happened during April 12th. We had a lot of breakouts, and if you notice that these are the breakouts which I leverage from. Let me copy this. Of course I cannot do the entire thing because with limited funds you cannot do a lot, but high net worth individuals and wealth managers can leverage from all these breakouts. So let me do a back test on all these breakouts, and I will show you also on real trading platform how this impacts on my own account. So hold on, let me copy this first and go all the way down. So for this day, maybe we had 189 recommendations, but maybe I could only use 30 or 20 of those. So let me copy this entire thing into a document, which I'll be pasting it on a document here. Just a second, let me do the paste, and I will go down all the way down here to see if it has been pasted for 412. Yes, so all these trades has been positioned into a cloud document. This is what every investors would get to see. High net worth individuals or wealth managers would be given a dedicated document like this. And let me run the backtest in a real platform which will look at this data, and I will take you back again to Interactive Broker to show you what actually happened. So let me log into my strategy. Hold on, give me a minute. Hold on, let me re-sign in again. There you go. And let me do the test for this particular date which we have just put in here for April 12th. But before we do that, let me also explain to you that this particular day we had about 190, say 189 recommendations. So each of the recommendations as per the threshold is of $4,000. So roughly we need around $756,000 to trade all this, but I will only use 60% of it. So the reason being is the velocity of the money is is to prove here the velocity of the money makes all the difference. So let me do this. 189 times 4,000, I need this divided by 2. So I roughly need around 378,000 to accommodate all these 189 stocks. Why? Because of the velocity generates the settlements within a day, and it's been reused. So I'll just try to put that number there for simplicity purpose. 378,060. Okay, I'm done with this part. So now I will run the back testing, but before I do that, I'll probably test out the build first. It looks everything is okay, and I'll run the back test. So what it will do is it will pick up all these stocks which are in recommendation, and this is exactly what will happen also in the paper trading platform. So on the real time, so if you notice, this is the one which you're seeing an icon here. This is running with Interactive Broker at this point of time, so I'm not going to temper this at all. So this is the back testing is still going on. So let's run it. I think it's okay. Let's do the back test. I can just close one of it because maybe it's not necessary. So this is going to run the entire back test for April 12th for all the 189 stocks, and this will throw the same results, almost the same results, also in real-time platform. And if I take a look at these stocks, if you notice, these are the stocks, first few stocks which I have traded. So if you go back to my portfolio and you take a look at a report activity statement for 412, let me run this for 412, which is here. You will notice that I had traded some of these stocks. So if you notice AAL, this is this one, 91 shares. This is what I traded. I made a profit here. Then I traded AES, which is this one, 353 shares over here. Again, I made a profit here. So I cannot trade all of them because you have fund limitations. But if somebody with high net worth individual can trade all of these because he has much more money than I do. So then we have another one, BRX. If you notice, all these trades are taking place around the same time, 10 plus 20 seconds. So on a high frequency trading, all these things move in within a fraction of a second. So the next one which I traded was BRX, which is probably also here. Where is my BRX? Oh, there you go. BSX, sorry. B BRX, sorry, BRX. Oh, there you go. This is the one, 187 shares. So this is 187 shares. Again, here also I booked some profit. Then again we traded on the same day around the same time. You see these are all settling within the same day. DDR, which is here, 320 stocks. This is what I traded. Again, here we made some profits within few minutes. So this generates the velocity. The settlement which is happening within the same day is circulating the money. So that's why I just mentioned here that although I needed 750,000, but I think I'll be good to go with 378 because of my velocity. So let's see what happens here. It's still moving on, so let it finish, and then we will do another round of test. So let me pause this for a second and I'll come back as soon as this is over. Hi folks, I'm back. It seems the tests have gone through, and if you take a look at the overview of what happened, I did around 362 trades. We had around 190, so 190 times 2 is 380. That means some got rejected, and we'll take a look at why some of these got rejected. If I take this and put it here and open it, you'll notice some of them got rejected by the strategy because the minute history was missing. If you take a look at this one, say SLW, where is that? There you go. 183 pieces, stocks that got rejected. SEM, that also got rejected for a reason. 298 shares were there. So the algorithm rejects a couple of symbols just before the execution time because it looks into several parameters, but in this example it's not able to get the history of the minute history of those stocks, the last minute history of those stocks, and therefore it got rejected. So it just to give investor an idea that human brains cannot do that. It's only possible through automated trading with algo trading, where the machine learning is using its own intelligence to figure out certain parameters before it trades. So that's one thing I wanted to highlight. The second thing is I will take the trades. So this is the overview of the report, where the win rate is 100%, and we will take a look at whether we lost money on any of these. So let me look at the trades, and let me also download the same thing. This was for 12th of April. So this is where it is. Just a second, let me write it down. I'm just writing down the file name, which is here, and this is the file. So these were the trades which happened from this strategy which you are seeing here, the breakouts which came out, and these were the trades which happened. So having said that, I will do some massaging on this data to demonstrate whether we lost on any of these recommendations, and how many of it, and what was their average return from investments, and the duration of it. So let's do all these things together. One is the date column, profit, ROI percent for each of the settlements, and duration, because duration is so important, because this brings in the velocity. So I will do this left. Let me put the formulas first. So this brings my date column, which is a date, and then I will copy this and put it all the way down here. And I'll explain you what is this cancel all about. But the algorithm has done a lot of trades for that day. So I put the dates there, and then I will try to put a filter on it, and I will explain what is this cancelled. If you notice, there are so many cancelled. So now this brings me back to my website, where I have explained what is cancellation and how does that happen. So if you open up my website, which is wgsinvestmentclub.com, and you go to subscription on Emerald, where I have explained how the algorithm basically takes care of different scenarios of price movement as it goes upward. So you'll notice that as soon as it goes from the buy point to 0.05%, 0.3%, it puts a stop loss there, a stop limit there, and then as it continues going further, it reduces the stop limit, and it continues going in this fashion. So it goes up to 5 different levels. So every time this is happening, it's cancelling the previous order and taking the new position as a next step. So anyway, this is the explanation of how the orders gets automatically cancelled in the algorithm in a high frequency trading platform. So you don't have to do this on your own. Normally no brokers provide this. You have to practically go in and change it if you have to squeeze the profit. But in this strategy, with the high frequency trading scenarios, the functionalities which are there is not available with any brokers in America. So and that also up to 5 levels, which I just explained to you. Now let's do this. Let's do a sort first on symbols, and now I have got the sort of the symbols, and now I'll take the profits from each of these line items. So I will say ABS of G3 minus G2 is my profit. So the ROI will be G3 divided by G2 will be my ROI in percent. So that's what it is. And then the duration will be I3 minus I2. In this case, it's settled after 8 days. So this is what I will do. I will copy and put it against every negative value, because that's the sale amount. And you will notice that every transaction brings every settlement brings a profit with a different percentage and duration. You will notice there are a lot of them with zeros, which means the funds are rotating at a very high speed. We are able to rotate the funds the same day, and that's the goal of this whole uh, exercise. This one seems like it did not settle even as on October 14th, and I will keep doing this till I finish it. But for the time being, I will pause it because I know I have a limit of 10 minutes on this. Hi, folks. It seems the backtesting is over. With all these recommendations, I could only do a few of these, but a high net worth individual or a fund manager could leverage from all of these. So, having said that, the results are already published here. It has been downloaded into an Excel file, and this is how the Excel file is looks like. Uh, you will notice that these are the filled positions of all these stocks like AAL. It's here 91. Then AAN is here, maybe it has to be somewhere here. AAN. Where is AAN? It gets this is the one which gets a position based on the sort order. So anyway, so these are the ones which has been extracted, and I will take you here that this has been sorted out. There were a lot of status which showed also as cancelled. This cancellation happens because, as I told you on my website, uh, it is there in the website where one would notice that this algorithm has features which no other broker's platform has this. So it has been inbuilt, where somebody can leverage up to 5 different levels, which explains exactly why there is a percentage difference in all of these which has been traded. So you can take a look of more of these files if you go to performance, and you will notice a lot of Excel files there, which is more or less 6 months behind. Hold on, I'll show it to you. The internet is a little slow, it seems. If you go to this is the actual performance. We are doing around 3%, but you have seen also on my live statement that I'm doing almost double S&P index. But this here you'll see a bunch of Excel files which you can download, which will be very similar to what you would see which I'm working on. You will also notice that these recommendations are spread across different sectors. So we are hedging across different sectors, number one. Number two, each of our recommendations are around $4,000 range. Okay, so this is where the algorithm has been preset to do that, and each of these recommendations are giving us different percentage level. This is the one which has not been settled, BXP. So let's take a look at what happened to BXP. Just a second. Hold on. Maybe if I go to Google Finance. Let's see what happened to BSP. Hold on. This is the stock. This was positioned roughly around, as you saw in the Excel sheet, on April 12th. So that's what we are trying to look at. On April 12th, somewhere here, we purchased this, and this kept on going down. It didn't settle to date, but it went to a low of $117 from roughly around $136, and then again it is coming up. So maybe it will take time, but what I want to let my viewers know that you can only have a cash loss under this scenario when the cost of the stock or the price of the stock goes down to zero, and it's very unlikely because all the stocks which we are trading are over $1 billion worth of, of market capital. So these are very good stocks. So if you take a look at the scenario which I'm talking about, all these stocks which we are trading are very good stocks where their market capital is over $1 billion. So the scenario or the possibility of you losing the money as a capital loss, and that also to $4,000, is very unlikely. So the predictive model mitigates the risk factors on the concept that it is controlling your investment, which is roughly $4,000. And you have also noticed here on the website which I have shown that it's hedging across all the different sectors equally. So the risk is mitigated pretty well. If you take a look at the performance statistics, the max drawdown for my year to date was roughly around only 8%. So there are a lot of factors which basically makes this machine learning intelligence, they all like stitch in together to bring in such excellent ROI. So coming back to this, I wanted to show my folks that if you notice the percentages are differing. Here this one took a spike in same day and it took milked out 1.39% profit. This was another stock which is hanging. So if you take a look at this also, maybe you'll get an idea of what's going on. It was somewhere invested on April 22nd around this range, and then it went all the way down up to $30 from $32. But unless it goes to zero, the chance of losing money is not there at all. So this strategy does not entertain capital loss. And even if that case happens, say for example 2008, when you took take the example of crash, how many stocks went down to zero? I would say in my research I haven't seen any. So this is the way it mitigates it. And even if it does, even if one or two stock does, how much you are losing? Only $4,000. So it is protecting the risk factors from all different angles with the number of exposures and the way the breakouts, because we are able to spread this across lots and lots of breakouts every day. This also took a spike here, so you will notice that how this principle which I just explained is working. So this is not there in any trading platform. Here we took a 2.49% in 12 days, and we sometimes even do better. We took 1.33 in 5 days. So this is also which is not settled. There are few of them which is not settled as on today's date, which is October 11th. So I will copy this and finish this exercise. So if you notice, there is no loss. None of these recommendations which you have seen has a loss. Okay, so the same would reflect on my real platform. If I take this one, say for example on this day, hold on April 12th, if I run my report, I think probably log back in. Oh my god. Let me log in, and here again I have to use my security card. So let me again do the reports, and I'll do the activity report first, and I'm going to April 12th just to show you that I have also traded those same stocks and made money out of it on a real-time platform. So let me pick up the trades. You'll see AAL, which is here. AAL should be somewhere here. I'm a little lost here. Let me figure out where is AAL, because it goes by a sort order, so it's a little tedious to get those. Hold on. AAL. Wait, oh, there it is. See, it was right on top and I missed it out. 91 shares. Here it seems like we got it at 14.30, 45.13, and we sold it at 44.98. So we had made profit exactly as to what you have also seen in that Excel. If you take a look at Excel here, AAL, see, we made a profit of roughly like 20 bucks, and here also in the platform we are making around 10 bucks, 10.87 on the real-time platform. Then we have taken AES, and if you notice, all these transactions are happening at 10 o'clock sharp, 10 o'clock 20 seconds. This is the in milliseconds it trades in high frequency platform. This one AES is also somewhere here, I'm sure. Yes, 353. This is what I traded again here. Bought it at 33, sold it at 37, made profit. So what I'm trying to say is that whatever I, of course I cannot trade all of them because of my buying power and fund limitations, but a hedge fund company or a very high net worth individual who has the capability to invest $700,000 every day, because recommendations come every day, would be able to rotate in millions. So a person with $5 million or $10 million should not have any problem accommodating all these breakouts. So let me pause here for a minute because I have to zip the recording and continue further. Hi folks, another thing I wanted to highlight was the percentages of settlement which happened in April on real-time platform versus what's happening now, and that is all because of enhancement to the software which is going on. So as you will notice in the in the real money, real trading platform too, we are not losing money, but there is always an effort to make it better. So if you take AAL here, let's do this. It was 4106. I won't take the round figures. Minus 4093 divided by 4093 times 100. Previously, around the month of April, the algorithm was able to milk it up to roughly around 0.31%. But if you take the same AL now, it is taking around 0.51%. So this is one of the very important feature which I wanted to demonstrate to my viewers, that there is a constant improvement in getting better ROI and at the same time reducing the duration. So right now if you take a look at this Excel file and I take an average, I just take an average of all the duration for that day, it seems like I'm doing around 5.70. So the efforts are on with the research to reduce this so that the ROI, the rotation, the velocity, everything, it magnifies. So this is an ongoing research, but this is all about machine learning, where there is no traditional way of looking at things. Human sentiments do not play any role. The moment a certain preset condition satisfies, the algorithm will basically milk out the profit. So it's very scientifically modeled. If you really look into all the factors of the threshold for each of the investments. So right now, even with 500k type of investor is still able to accommodate up to $4,000 threshold per stock. But for hedge funds and HNIs who are coming in with over $5 million portfolio type of thing, maybe the threshold for these for the independent stocks, the individual stocks, would be probably going up to maybe $8,000 or $12,000. This would be again case to case basis where the algorithm will be pre-configured based on those conditions. So if you really look into the number of breakouts we generate every day, it's a lot. In April itself, we did around April 12th. If you notice, we have generated around 189 breakouts. If you take the next day, which is April 13th, I believe, yes, and let's run that, you would notice there are quite a number of breakouts. Here it was probably a little less, and another thing I will probably demonstrate at this point of time, that what happened in April 13th. If you go back to the S&P, maybe here, and if you take a look, see, if you take a look on April 13th, it was seeing some bearish conditions there. Okay, because if you notice, it was from 1st of March to April 13th. If you notice, see, it is looking into some bear conditions at this in this region. So automatically the algorithm, which qualified around 101 shares recommendations on April 12th, have reduced it significantly to only 52 shares. But that doesn't mean that these 52 shares are making losses. All of them are making profits, and it will be identical to the one which you saw in Excel. So you can download those from the performance tab and keep looking into all the days for all the recommendations which we have made. The only difference which might happen is if the markets are bear, it takes a little longer to settle. The velocity reduces a bit, but at the same time, the predictive model reduces the breakouts significantly when it realizes that there is something wrong in the market. So I think this explains literally as to how things are being improved with real-time platform which you are seeing versus the returns which you are seeing as on today, and this progress is going on. As I said again, viewers, institutions, high net worth individuals, even individuals, you have noticed that mathematically the factor of capital loss is not there till a stock price goes to zero. So having said that, and if you leverage on all the breakouts which are coming out every day, there's an ocean of opportunity for all investors to leverage on the breakouts, generate a velocity, and trade, make every trade profitable as to what you have seen here. So again, it's the same simple concept. If you have $100 with you and every day you are settling $30 with some profit, and that $30 for 20 trading days is already equivalent to $600. So if every trade gives you a profit and you are able to rotate your $100 to $600, you are already rotating 6 folds. So to give you an idea, so that the viewers might be excited, is I will take you to my P&L where there is a control of how many rotations I have done for last 1 year, and you'll be surprised. Here the column which I'm maintaining, I've done roughly around 79 times the same concept as I just told you. 79 times my funds has been rotated over a year to generate the type of a profit which I have shown and demonstrated. So the profit, the return, cumulative return, which you are seeing here, is that there are many reasons why we beat the S&P. Right now, it is just double, but with the new software which is coming up, and which is probably going to give around uh, uh, 50% range of velocity. Before it was around 32%. Now it would be expected to give a velocity of 52% roughly. Uh, that would increase the cumulative return to probably triple the S&P index. So next year, hopefully by the around this time when I publish the year to date, maybe we would see the S&P versus my performance to be around threefolds more. So that's the beauty of machine learning. So as you know, most of the industries are still into traditional, but hopefully when a day when probably 10 years down the road, when everybody gets into machine learning intelligence, maybe this index of S&P will take a higher high, because the benchmarking of S&P currently is more to do with traditional based investment. But as and when people and institutions bring in more machine learning intelligent capabilities into their algorithms, of course the benchmark for S&P will also go up. So doubling S&P or tripling S&P at this point of time is what my goal is, and I would want every investors joining this club to leverage from machine learning intelligence, where, as you have seen, you'll never be a loser. The chances of capital loss is practically not there. But yes, what would happen during World War III if that happens? I cannot say that, but at this point of time, um, none of these stocks. In 2008, I can think about only one or two companies like Lehman Brothers, which went out of business because of some other reasons, and therefore their stock price went down to zero. But such cases don't happen every day. But even if it happens, when you're trading with hundreds and hundreds of stocks, and that also limiting yourself to only $4,000, what's the big deal? Which basically comes down to exactly what I was talking about here. If you take a look at what I just showed you, say for example, I've invested 120k. I'm just giving you an example. 120k times 72 times is 8 million, divided by 4,000. That means I have traded around 2,160 stocks. So if each of these 2,160 stocks is giving me around so if I do this, 79 times 120, just to give you an example. So I have traded roughly 9 million divided by 4,000, means I have traded around 2,370 times different stocks, and each stock is say 2,300. So each stock is giving me around 0.45%. So if you take this times 0.45 divided by 100 is $18 times 2,300 times I have traded 41,000. Out of 41,000, even if I lose on one, what is the big deal? So that's the point I'm trying to make, that even when a crash comes, how many stocks will go down to zero is the risk you are going to take. Maybe 1, 2, 3 companies like Facebook, Bank of America, Merrill Lynch, Mobil, how likely is it for their stock prices to go down to zero? So that's the risk which this machine learning is taking, and I think it's a very fair risk in the market if you really think in terms of all the components tied in together with velocity and breakage, breakouts, which is happening together. So if you stitch everything which you have seen so far, makes a lot of sense. in building up ROI. So I won't be surprised if I can triple my performance from 29% to maybe like 45% by next year. So please stay tuned. I would welcome every individuals, high net worth individuals, wealth managers to take a look into my research, and especially with the help of breakouts, which is in hundreds every day, all successful in terms of ROI. The research is on to see how fast we can turn around with those in terms of velocity, which will generate more ROI. So everybody welcome. I mean, it's just that you have to understand the concept of machine learning intelligence versus traditional trading. Here we don't look at any charts. There's nothing we look at. It's all driven by the predictive model. So thanks for hearing me out. Please visit my website, which is here, and you can always get in touch. I have a contact information. We can also do meetups to get in touch with me. We can sit on a cup of coffee and talk it out. People who are interested, they only have to use Interactive Broker, and I am also a vendor of Interactive Broker, where I specialize on velocity of money and breakouts. So this is where my specialization is. This is where my strategy is banking on, and which I have tried to explain. Thanks for listening once again. Bye bye now. So to give an idea about rotation of funds, it's a simple concept. As I said, if you have $100 with you, $30 of it is rotating every day. In 20 days, you're already rotating $600. And if every trade is profitable the way you are seeing here, or the way you would be seeing in the Excel, which is here, I'll just show it to you. Here under performance, if you go down to all the dates here, which is kept 6 months behind, we are trying to publish all of them from January all the way till the end of this year. It's a lot of work, but we will try to do it. We'll keep it 6 months behind so that you get to see what are the settlements, how long it takes, and I will demonstrate one for you right now. You can open it. Open the Excel file of March 17th. There you go. So this is March 17th. You can download this data and test it out on your own to see what is this. What is this showing up here? Okay, sorry, I was looking at something else. Now, so if you take a look at this one on April 12th, this has been already published, so you can take a look at how many of them are on float. But you'll notice that there is no losses. Any of the returns which you are seeing, there is no negative return in it. So as I say, the strategy does not allow negative returns, so there is no chance of making a loss. Number one. Number two, all these returns which are showing are different. Here you're seeing in 12 days 1.75%, but you'll notice within the same day itself also there are 0.4% and 0.59%. So it's all different, as I told you and explained earlier. But the point which I'm trying to make is you will see lots of them. Like if you go down here to the what do you call to the website and take a look at all of these, you'll see hundreds and hundreds of recommendations which has been made, and not one single loss. So the concept goes down to, if you are generating velocity and breakouts along with velocity, and each of them is giving you a profit of say 0.45%, mathematically there is no reason why you will not make any returns unless you have a loss on any one of those. So if every trade is profitable, you are getting hundreds of breakout every day, and each of these breakout, probably 50% of it is settling within the same day. Number one, you're rotating your funds faster. Number two, you're accumulating smaller profits but in large numbers because of breakouts. So you are looking at around 7 to 8%, and I will show it to you here. I think I closed that Excel sheet. Hold on. Let me open up that Excel sheet again, which was here. Hold on. Let me open up from one of the Excel sheets. Sorry, hold on. I've lost. Oh, here it is. So let me open up any of the Excel sheet just to demonstrate something to you. So I've opened this Excel sheet, and now if you take, which is for February 22nd, now if you take this as an example, all the profits which we have made during that day, and you take an average of that, say for you take an average of all the profits you have made, so you have made around average of 0.53. Now let me put a filter on zeros just to let you know that okay, how many trades we have done. I think we have done on this day, on February 22nd, if I go back to my files, hold on, if I go back to my files on February 22nd, I'll tell you exactly how many recommendations we had that day. So we had around 165 recommendations for that day. So out of that 165, let us see how many settled. And you can do this as an example to test out. So let's see how many settled. So let me put a filter here first. Oh, sorry. And let me select only 0. So there was settlement happened in 0, 1, 2, 5, 6, 7. The worst was 167. So anyway, let's take only zeros, and just for simplicity purposes I will just take this number here, because I know I've put a filter, I cannot make a count on that. So I'll just copy this and just paste it here as is, so I get only the zeros. So now if I do a count, so I've got 111. So you can imagine, out of which I just said now, 165, 111 got settled. So 111 divided by 165 times 100, 67% of it got settled within the same day. So that means if you take 67 stocks times 4,000, you have rotated within a day $268,000 out of your total investment. Say if you take 165 times 400, out of 660 you have already settled $235,000. So it's a huge rotation. The impact of it is huge. Basically that money is again ready for you to trade next day from next day's breakout. So in a conventional trading or traditional trading, this is not happening. You invest in Microsoft with the hope that okay, after 2 weeks it will go up by 2% and I'll milk it out. But in this strategy with machine learning, within that 2 weeks you are generating velocity to milk out profits from breakout up to an extent of 50% of your fund is a lot of money. So this itself brings to the impact of what I was just trying to tell you, that right now we are at 27% with the previous softwares, but hopefully by next year, with the velocity and improved percentages which I have shown you, this will probably be around 40%. So there's a projection which I have done for some of the people who might be interested is here. If you're looking at around $1 million, you're looking at around 36.52% after tax. I repeat the word after tax. It's huge. If you're looking in between this range from 110 all the way up to $1 million, you are looking at around 33% roughly average return on investments after tax. It's not a joke. So it's very important to understand the velocity and breakout combinations are bringing in that type of a percentage. If you're looking at, even if you put your risk and net worth balance between 10 to between plus minus 10%, and you're leveraging roughly 4 times on it, you are looking at around 36%. This is what I'm trying to explain here to understand better, that if you take a look, there are parameters which basically will tell you for a certain time. Say for example, on October 13th, I did not get a recommendation to buy or make a new investment. The reason being is it is measuring your the risk factors, it is measuring your cumulative returns which you are making, and if there is no improvement, like for example these 2 dates, there is an improvement in cumulative profits which you have made based on your stock holdings and the profit, and at the same time also your net worth is growing. So if you're keeping your funds for a long time, in my case I'm putting a threshold at around 25% range, 20 to 25% range, so I'm very okay with that because I have no plans to withdraw cash. So people who have investment plans for at least 3 years, 4 years can easily go down to up to 10 to 20% range and leverage on their returns. If you look at my return year to date, I've made around 34%. So the Excel sheet which you are seeing is for just year to date, but this one which you are looking at is ever since I started, which is roughly a year's worth of data. So last 9 months I have made roughly around 27%, but in last 3 months I have made additional 27 minus 34, roughly around 7%. So in a year's time, 34% returns is not bad. If you really look at it, it started from September the 23rd. Is just about a year plus, just about a year plus. I'm already at 34%, but my year to date is at 27.52%. So the returns are very good. This was with the previous software, but with the new software coming in, it is expected that the velocity will go up a lot more, and people can benefit out of it. So having said that, this is all what I had to present in terms of how people can leverage from breakouts and velocity. And if you keep these two constraints, if we keep those two factors and have a controlled way of investments, you are not going to lose money. So this is very important for everybody to understand. So if you don't have any questions, if you do have any questions, I'm sorry, you can always go back to my website, come to the contact and write an email to me. But at the same time, I have a blog which I'm still writing. But if you really want to understand the velocity factor There is a written explanation of what this velocity can do and how we measure the risk versus return in terms of multipliable factors, which I have just demonstrated. So you could please read it. It's still a process of updating and changing it. If you really want to know about velocity of money, this is what is the expected interpretation of it, and these are not important unless you really look at it. So anyway, so having said that, I would like to invite many more investors into this club who believes in machine learning, which is very precise. There's no human emotions at all, as you have seen, and make returns. I mean, may generate wealth every day from every trade. So that's the ocean of opportunity you would be getting if you subscribe as a member to this club. So thanks for listening, and bye now.